Welcome to Stocks to Watch, where we bring you the best and latest insights to help you navigate the financial markets. I am Munir Barazi, your business analyst and host, and today I'm speaking with James Yeo, one of Singapore's most recognizable voices in personal finance. He's the founder of InvestKaki, a fast-growing platform empowering everyday investors with clear, practical, and honest insights. Hello, James. It's good to have you with us today.
Thanks, Monia. Thanks for having me.
Absolutely, you're quite welcome, and it's a great chance to have you here and introduce you and the platform to our audiences. So, if we can start from there, can you tell us what separates this platform from the rest of the platforms giving investment education or guidance?
Okay, so for InvestKaki itself, my mission is pretty simple to simplify investing for busy professionals so they can grow their wealth without spending a lot of time, hours each week watching the markets. So I cover both Singapore and US stocks as well as sometimes Hong Kong stocks. So that's what maybe set mine apart from the other, blogs or investor platforms out there. Yep.
That's a very good and convenient value proposition because those people are very busy. So I'm sure they appreciate a more focused investment guidance, if you will. And I want to talk more about your framework. You've been writing actively about Singapore, Hong Kong, and US names. So, what's the core framework behind your stock selection, and how has it evolved in 2025?
Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Okay, so for this question, I would like to dial back to the past where I just got started, and to be honest, I was trading actively for quick gains, quick profits when I first got started in investing, or I call it trading, and then gradually I shifted to more value investing because I get to know about Warren Buffett and stuff like that. So I started to look at more fundamental stuff. And more recently, I would rather say in the last few years, I shifted to a more barbell strategy. So on one end, I look for smaller, deep value or turnaround names in Singapore. And on the other side, I hold like high quality names, be it the US stocks or the Hong Kong stocks. So these kind are the more compounder stocks where I hold them for, over a long period of time. Yep.
And I imagine that is much less stressful than day trading, holding the stock
Yes,
for a longer
definitely.
period of time.
Yeah.
Absolutely. And James, I want to shed light a bit about latest developments in Singapore. The Monetary Authority of Singapore has just rolled out this $5 billion Singaporean dollar equity market development program, a huge push to deepen liquidity and strengthen the local stock market. From your perspective, how significant is this move and what signal does it send to investors?
Personally, I think it's a quite a meaningful step because I do really see the bustling activity that's going around, be it my own investing community, my friends who are in the stock brokerage, space and stuff like that. So I also see a lot of people stepping up to, share thoughts about this kind of thing. And but the more important thing is that it shows policymakers are really serious about, pushing the liquidity and making sure that Singapore remains a vibrant stock market right now. So not just for blue chip stocks, because we always, whenever you talk about Singapore stocks, people have that mindset that it's always just for the STI 30, the 30 blue chip stocks, and then the other, smaller and mid caps often get overlooked. So I do feel that this is in the right step, especially for retail investors, because it means better coverage, tighter spreads, and potentially a narrowing of the valuation gap for the companies, especially the companies with solid fundamentals. Yep.
That's absolutely good to give smaller cap companies a chance to also get funding and liquidity and also invest in good projects that would ultimately benefit the Singaporean economy and everyone in the process. I imagine. And if we could shift to Hong Kong, Hong Kong has long been one of Asia's key financial hubs, but in the past few years, it's faced tough run with weak sentiment, capital outflows, flows, and low turnover. So, how would you describe the mood in the Hong Kong market right now, and what's your outlook?
For me, I think that the narrative can sound like doom and gloom because it's largely exacerbated by the ongoing trade tensions with the US. But if I were to look actually at the charts, the market has been quietly recovering. The Hong Kong Exchange Index is also up more than 20% over the past year. Tencent and Alibaba is up, I think, more than 50% and 70% over the same period. So I do believe that the market isn't as so-called dead as people assume. At the same time, I think we need to stay cautious because China can turn fairly quickly due to the policy shifts or any macro headlines they have some tensions with the Japan or the US and stuff like that. So I do feel that the key is staying quite selective and focusing on businesses with stable cash flow and maybe clear catalysts. Yeah.
Absolutely, focusing on businesses with good fundamentals to also survive any risk events that could happen because of China or any other factor out there. If we could again shift focus to the US markets, and US markets are very influential globally. Anything that happens in the US will most likely have an impact elsewhere in China and Asia, Singapore, Hong Kong, and elsewhere. Of course, especially when we're talking about tariffs and trade
Mm.
policy and protectionism.
Yeah.
You've witnessed the storm that Donald Trump has caused in the market um, um, this year, back in April, when he imposed those tariffs, and uh, American equities plunged as a result. So, what's your outlook on tariffs? Where do we go from here? Have we weathered the storm? Is it behind us? And how will this impact American equities moving forward? Forward.
Mm. Oh, that's a great question. For me, I think that tariffs has always been his favorite tool. So it's unlikely that they will suddenly abandon tariffs. But honestly, no one can really predict what he will do. There is even this taco trade, right? So Trump's always backs out. So I mean, no one really know what he's gonna do. But based on what I've seen, he's someone who likes to, maybe write on promising sectors for publicity. And right now, that's AI and crypto. So AI part you can see from the Stargate initiative, and crypto you can see it from the American Bitcoin, the company that is led by his sons. So I do feel that you have to play to where he's headed to. Yeah,
Mm.
that is what my focus will be if you were to ask about Trump lah. Yeah.
Yeah, absolutely. And I would add to that you always have to follow his Twitter or Truth Social account, because in the past we didn't know about something called a tweet risk, but now a
Risk.
tweet or any post from Trump could really rattle the markets. So,
Yeah.
and it's a good point that you've mentioned. We should uh, kind of understand where his focus is in order to make better investment decisions. So,
Yeah.
good tips there, James. Thank you. And my last question is: you've seen retail investors across Asia, and especially in Singapore, becoming more active and sophisticated in the past few years. So, what trends are you noticing right now in how everyday investors approach the markets? Are they becoming more disciplined or still chasing short-term trades? Especially when you've talked about your previous style and now how you've switched to more value-based investing.
I do believe that I'm one of the rare ones who still, chase short-term trades in the past. I see two clear camps in Singapore today. So the traditional group still very risk adverse, like for example, my wife, friends that I know, they are very risk averse. They would like to go for things like fixed deposits, sure win stuff like dividends, REITs, and maybe income-focused blue chip stocks. Yeah, so they for Singaporeans, generally they are quite wealthy in the sense we do have high incomes here in Singapore. So they want some sort of stability and predictability. And the other camp which I'm seeing is maybe the younger group. So they have shifted heavily into US stocks and especially crypto markets. So you can see this from the trading patterns and analytics shared by low-cost brokerages like Mumu and Tiger in Singapore. So I do have the privilege of liaising with them, and I do sense that there are a lot of people trading US stocks, getting into US stocks, which is of the more younger demographics. And so that being said, right, that's exactly where I try to bridge both worlds. I cover the stable Singapore stocks for long-term income and the US like growth quality names for the younger investors who want to build their portfolios. Yeah.
That's very interesting. And it's good to have different groups of investors providing a different liquidity in different areas of the market, because companies do need funding and projects do need funding. And I understand that the younger generation, especially Generation Z, is more interested into crypto and decentralized finance. And that's still a new avenue until today that we need to dive more in depth into. Perhaps in upcoming interviews, we can discuss those topics with you.
Sure, definitely.
Yeah, I would happy to discuss those in an upcoming interview. Thank you so much, James Yeo, the founder of InvestKaki, the platform. Is that how investors can reach you, or audiences can reach you?
Yeah, they can just go to my website, investkaki.com. Yep.
Okay, wonderful. Thank you so much, James, and I'm looking forward to
Thank
seeing
you,
you
Mandir.
again on this show. Thank you so much.
Thank you.